Hi, everybody. This is Artist Rights Institute webinar, podcast, whatever you want to call it. Let me adjust my camera. And we're going to talk today with Keith Bernstein, who's an old friend of mine and is probably the top royalty auditor in the music business. Um, and we're going to talk a little bit about audits and when to audit and what's your strategy when you do audit. So Keith, why don't you tell people a little bit about your background
Well,
and then we'll get into it.
according to you, I'm the best auditor, so we'll
You are,
start
yeah.
there.
Just start
Uh,
there. Yeah.
yeah, it's uh, so hard to believe. 35 years in the music space, living in the trenches of royalties, royalty collection, royalty statements out, licensing and clearance, from the days of A&M Records where we met, and then my own company, Royalty Review Council, that was founded in 1999, and then Crunch Digital around 2008, serving different purposes, but for audits. Royalty Review Council has probably done more audits worldwide, especially in the areas of digital service provider audits than anybody. Um, and that's what I'm up to. And the interesting thing about audits is they're interesting.
They are interesting. They are interesting. So let's a lot of people who are going to be watching this probably have aggregator, what we would call aggregator agreements or digital distributor agreements with, the dozen or two anointed ones who are allowed to deliver tracks to the DSPs. The good news, in a way, about those deals is that you don't have an audit right. So we can just put those to one side, no problem. And you'll have to engage in what I call the Blanche Dubois method of royalty accounting, which is relying on the kindness of strangers. But if you have a publishing deal or a label deal, you will have an audit right. That would include publishing administrators, co-publishing deals, whatever form it takes. And that is a process. You have to decide kind of when the time is right to do an audit because it's expensive and it's a lot of work. So Keith, when someone comes in and they've been in a deal, let's say for a few years, bearing in mind that you probably don't have much over 24 months, probably, maybe 36 if you're lucky, to look backwards. If you've been in a deal for a while, when do you recommend auditing? And is there a hard and fast rule about when you audit?
Are we talking about an audit of who?
Let's say, well, anybody really who's paying you money, but let's say auditing of a publishing administrator.
Um, well, I think whether it's, you mentioned the aggregators, you mentioned publishers, you mentioned labels, and it's completely different, approaches and thinking when it comes to that. The aggregators, as you mentioned, might not even have an audit right.
Right.
I don't understand necessarily all the business reasons, except maybe those aggregators are dealing with tens and thousands of indies. And that'd be a bit overwhelming if you've got tens of thousands of indies who maybe legitimately are earning $100 a year,
Right.
and the cost associated with them trying to kick the tires on if there's any more money involved. Um, but whether it's them or whether it's the labels of the publishers, if you have the 3-year audit right, I probably would have start looking and do desktop reviews within 6 months, and looking for myself, with my own knowledge of where I know there's been activities. So maybe 6 to 9 months, maybe nine, where I know there's knowledge of activity of my music. And I'm looking at my statements and trying to get a feel if I'm generally seeing reporting coming through from the places I know firsthand. I believe there should be money coming through.
Right.
Uh,
What would those be,
and
would you say? I mean, or is that an actual statement? Is that depending on the artist or the songwriter? Is that or is that something that you know and you suspect regardless of who it is?
Well, I'm just saying in general, you've got
Right,
people that call themselves income trackers,
right,
and you can be your own income tracker. You could be aware if it's a I mean, look, I'll use my son for example. He recorded his own music. He gave it to an aggregator, and him and his friends were using the music on a couple of the digital services. And then me being his father doing audits, he comes to me when he's looking at his statement from the aggregator, and he's like, "We actually played my music, and I haven't seen anything coming through,
right,
from there." But then that starts a few things like, are you checking to see if, you're listed as,
right,
the creator, going back to the aggregator, do they have the information right?
right.
So you
Metadata.
can be
You mean like
yeah, the metadata.
right?
You can be your own advocate if you've got a good sense. If you're an indie artist and you're advocating for yourself and you have a good idea where stuff's being used and you're not seeing it, then first thing you're doing is looking at like is there a problem that can be fixed to help me? Is it
Right,
sitting there? Or is it starting to become obvious that for whatever reason all my money's not coming through? Um, and I got to tell you though, from the label and the publisher side, uh, I generally think that at least the labels and publishers I deal with, they are always trying to get it right.
right,
They are. They're not interested in holding your money. They can figure it out. They want to figure it out because generally speaking, if they don't know who to pay or they don't know what to do with the money, they're not taking their admin fee. So,
right,
it's in their interest a lot of times to make sure it gets paid through. Um, but if you were to audit, a label or a publisher, it's the same thing. You should be looking at the statements where you're expecting to see activity, and then being your own advocate and likely maybe first sending general questions to a label or publisher saying, hey, this DSP, I mean, look, this DSP, I know how many streams I've had, and that was 6 months ago, and I'm not seeing anything like that,
right,
coming through. I mean, can you give me some insight? But you're right though. Depending upon your dollar value of what you're getting, it might be cost prohibitive to do a formal audit if you even have the right. So unfortunately, sometimes it just doesn't make economic sense. What maybe you can sometimes do is, make a change and go
right.
somewhere else and then just see if there's a change in your income.
And when you talk about audits, I mean, people get confused, and I don't mean artists, I mean lawyers get confused. I mean, we've had experiences with this where people refer to you know gap accounting, which has probably no connection to anything real. And what the way I usually try to phrase it in the audit clause is somewhere in there I will say royalty compliance examination, right? And because that's the way I prefer to refer to it, because I think that's probably a more accurate way to describe what actually goes on. So talk about that. What when you go into audit, right? What are you actually doing? Are you is this like a financial accounting audit where you go in and look for, this account got debited and this account got credited, or are you looking for um, whether they've complied with the contract?
Well, it's a combination and it depends upon your deal. So if you're unit-based reporting, where it's a calculation based upon, your activity and maybe there's a set rate, then looking at financials and inbound revenue and receipts, become irrelevant. You're more interested in getting to the usage data and be able to test the usage data to see if all the activity that is yours is making its way to the statement. So you're
Right.
going from the source, if you can get it, to the statement. And then the financial audit would be if you get a percentage of receipts, then yeah, you got to start going into the books and figure out if the revenue for particular periods of time, is the pool that's being used for calculating your receipts. And then if it's a subscriber-based calculation, then you got to get into the accounts, of the subscribers associated if there's what we call a greater of formula, where
Right.
it's greater of percentage of the receipts or subscribers or some sort of other
Total
minimum. So it depends
content
on your
cost.
deal. Right. It just depends upon what your deal says, and that's where you decide what am I going to look at.
Talk a little bit about the statutory royalties that are the MLC is collecting. Um, I know they went out and they announced that they were going out to audit something like, I don't know, 50 DSPs who are using the compulsory license for streaming mechanicals. So when they go out to conduct an audit, how does that work if you're someone who is getting paid by the MLC?
So if you're getting paid by the MLC based upon
Because you're not
inbound
going to be
usage
in
of
that
money,
audit, is my point. You're not going to be at the table in that audit, but you theoretically would benefit from that audit.
correct. And that's the same as it would be if a record label conducted an audit of a digital service, if a publisher, conducted an audit, or somebody else, even an aggregator, conducted an audit, of somebody. They'll deal with conducting the audit, and then how they allocate that money to everybody that had earnings during the same time period. Um, it could be actual if they can attribute it straight to you, or I've seen them estimate based upon your percentage of earnings compared to everybody else's percentage of earnings during the same time periods and allocating your share pro rata
Right,
based upon that. Um, and I don't know, because I haven't come across it, whether if you conduct an audit of one of those companies and they've audited upstream to a service, if they would show the auditor, the audit report. I don't
right,
know if they would. Um, but if the MLC, if they're conducting an audit, they're looking at all the variables they need to look at to make sure that how they were accounted to are accurate, and they're doing the work, to make sure that they got paid everything. And I think in their particular case, you know, I would think you can attribute, the earnings to a specific song. If the claims are based upon unreporting of songs, then you know which ones should get paid.
right,
And then if it's attributed to underpayment of earnings or revenue or things like that, then I would have to think they push through an adjustment that would be proportional to what everybody's already been paid for the same time period.
right. And there's going to be, I don't know, I think that there's going to be an incentive in a way to try to do it on a proportionate basis, simply because there's so many transactions, right?
Well, we call that sampling, where you look at your review period and you first look at maybe your cash receipts and
And
you
that would
kind
be
of
the
see
3-year look back or whatever your
if you
look
have,
back
yeah, it'd be
is.
3, but we've had some where people tried 15. Um, but 3 to 5 years. 3 is generally the case. 4 is sometimes, but that's about it. And there's a lot of twos and there's a lot of ones, depending upon who
Yeah,
you
right,
are and who signed your deal. But on the 3-year look back, you'd be looking at the your own cash receipts, you know, and decide if you see a pattern. Is there a seasonal pattern? Like, is it make sense that the greatest earnings are fourth quarter or second quarter or whatever seems right? And then you pick a period of time that make up, let's say you pick the fourth quarter of a particular year, then you'd want to get data on all 3 months in that quarter. And when you're conducting your review, we have what's called, system errors, non-recurring errors, creative errors, inadvertent errors. And if you see an error, one of the first things we do is assess, is it recurring? And then that's why you're looking at the other months and you can articulate this is a recurring error. It's a system error. The system is doing this every period and miscalculating it. So I just did this quarter. I'm going to do another quarter now.
Right,
And I'm still seeing that same error. I'm going to take the position if I reviewed every quarter in the 3 years, I'm going to see the same error.
right.
So rather
Because
than
it's a
do
system
that,
error. Right,
yeah, rather than do that, can we just all agree this percentage, whatever the error rate is going to occur every quarter? Oh, we can't agree? Then I guess you got to give me the data for every month, 36 months for 3 years. And I'm sorry if that's a burden, but you don't seem to accept
right,
that this is a recurring error. Then when you get a one-off error, and it kind of feels like a one-off or something didn't get posted right or something, got misapplied, and then you look at a few months, you're like, yeah, give them the benefit of the doubt. That was a one-time error, and
right,
I don't see it happening again. So part of it is while you're doing the work is deciding, when you go further, and you want to avoid a rabbit hole. And what I mean on a rabbit hole is you look at like, wow, that particular thing to review is going to be long and hard and detailed. And let's just say we're right. How much, if I'm
right,
right and they agree, how much is my maximum I'm going to get? Oh, $400. Okay. So maybe that's not where we should be spending our time or your auditor should be spending their time. So when you go into these audits, especially if it's expensive for you and there's not a lot of earnings. One of the early things you want to do is you go for the area that generates the most money for you and look in those areas and don't go into rabbit holes. Go into areas where, you know, check your rate, check the receipts, check the quantities, check, and get a feel for like it's generally looking okay. And maybe I don't need to even finish this audit
right,
but I've seen many people, feel that they've got to go down, or their auditor feels, not this auditor, but their auditor feels they have to show that they're capable of finding errors. So they keep going and going and going down the rabbit hole. And then they'll come up with some crazy claim
right,
just to like prove out that they it was worth the money and time, for you to spend on the audit, even though nothing was recovered. But they'll come up with something because they took the contract
right.
and they held it up to a light and they tried to interpret it differently by saying if a comma is missing here or a capitalization's here, I see a 20% error. And that's a waste of time for everybody. So my recommendation is go in, look for the high level, and if it's not there, and you've kind of proved your point, you feel good, then just stop.
Move on. Yeah. It's a lot of this is really kind of trying to be economical about how you go about this because I know from like I haven't supervised an audit in a long time, but when I used to do that, we would run into some of these things that were just claims that were completely insane, right? And what would happen is that the claim that was insane would get into the audit report. This is when I was label side. And the audit report would get sent to the client, to the artist, and the artist would get a number in their head and then trying to talk them out of that number, particularly when it turned out that there was absolutely no basis for, big chunks of their claim, was a very difficult thing to do. And we often ended up paying for the audit just to, if it was a big enough audit, and there was a big enough artist, we would just pay for the audit and make it go away.
Well, what's interesting, well, not interesting, but you're bringing up memories. In the 90s,
Not mentioning any
when I
names.
was
Yeah, right.
when I was dealing with inbound audits with a situation just like you described, and we came up with a concept and the audit provisions that the auditor agreed to review a draft report with whoever
Right,
the point person was at the label to clarify any misunderstandings or missing information or whatever it was before the report went final. And that provision was in our agreements first before anybody. And then
right.
that provision made its way into, lots of agreements. And then I think ended up even getting into this in the statutory ones
Oh
because
yeah. Oh,
those ended up
absolutely. Yeah,
yeah, those ended up requiring that the auditor had to review draft findings in advance of a final report.
that's right.
I think maybe with the sound exchange audits. But I have to tell you, the reason, and I remember when this happened at A&M, why we wanted this is it was a artist who audited all the time and very friendly with the label. A lot of great stuff with the label. They made money, the label made money, and there was never really any claims. And then this auditor came in and the audit report came in. They never discussed the findings with us at all. They just rendered it to this artist who'd been on the label forever. And it was well over $500,000.
Yeah.
And when we got the report, problem number one was one of the biggest claims, which said, this is the total source money, meaning like this is what was sold. Let's call it $1 million over here. And the label gets 50%, so 500,000, and you get the other 50%, the other 500,000. Just looking at the auditor's schedule, the claim was $1 million. And I'm looking at it like if the total inbound was a million, how could the total outbound be a million? So we asked the auditor to send their Excel file. The auditor, in their formulas, should have taken in their calculation $1 million times 50% and subtract what's been paid, and the net result is the additional amount.
Which, by the way,
Well,
is the standard revenue split for any net receipts.
for the
Yeah,
master
master
use
use.
receipt
Yeah.
stuff.
Yeah.
And at that time, and blatantly, we're like, he made a mistake in his formula, and if we had just had eyes on it, we could have the whole when we fixed this formula, like the whole claim went away.
Right.
Like the whole claim went away. And then we had the issue on that same one. I remember that auditor. Um, he made a claim for a certain rate on a box set.
Yeah.
And then on that box set was made up of tracks that came because, like I said, this art has been around a long time. That came from like 4 or 5 different agreements, and each of the agreements all had different royalty rates. And so he calculated a claim based upon the rates in each of those contracts and what we actually paid. Another good number. What he failed to do, or should have just asked, is there an amendment or an agreement specific to the box set that says you pay this percentage of royalty
Right.
for every master, irrespective of the original contract rate? If he
Right.
had just asked, and when we gave it to him, we wiped that one out too. But you know
Right.
what the problem was? I remember that artist and their lawyer calling our business affairs department so upset with
Yeah.
saying how much was found that was not paid accurately. Then we said we need to have a provision in the agreement that says you got to look, you got to share that draft report
Yeah.
just for these situations.
That's right. And it's really to everyone's advantage because it doesn't and from the label's point of view, you really have to keep those claims out of the final audit report because convincing the artist that it was a, specious claim to begin with is much harder when they've gotten that big number in their heads. We had another one like that where it may have been that same auditor and it may have been that same artist, in fact, where they made a claim. I don't want to get into the whole ins and outs of it, but it was a claim that was based on what they said was a ruling by the British Copyright Royalty Tribunal. And I tried to find a copy of that decision by the British Copyright Royalty Tribunal, which did exist, but it wasn't very common in those days. It was before the web. And I finally tracked it down through our London office. I got one of the lawyers over there to send it to me, and I read the whole thing cover to cover, which is about 150 pages. Nothing. It was not there. It was complete fabrication. And I had to call their lawyer and say, I don't know how to tell you this, but your guy made this up, man, and that claim is zero. And it was one of the few that were left. Because the other thing that would happen a lot, and I don't know if every label does this, but what I think people really ought to ask for if they don't get it right away is if there's an undisputed amount in the audit report, just pay it. Don't make somebody go through the whole audit report process. Just pay it. If it was a mistake on the label's part or the publisher's part, they should have just paid it to begin with. I don't know if you'd agree with that. And there are people that would not agree with that, but I
Well,
think that
I
it's
would agree
better
with it,
artist
but
relations.
I would agree with it, but generally what happens is there's timing issues related to that payment when it hits statements and the timing period of the audit report, and then you argue later on that the amount paid through wasn't what it was in the report. But I agree with you. You
You
can
have to
you can
do it
stop the
carefully.
clock.
Yeah.
You can stop the clock if there's an interest provision. It
Yeah.
makes sense, to do it, but a lot of the times they don't want to do that because they believe that there's going to have to be a settlement agreement at some point. So it's just easier to wait till the audit report is resolved in full
Right.
and make a payment.
And often they want to hold that in the back pocket, which I personally think is silly. But that's
Yeah, I
no
mean,
one, no one's
I
asking
get
me,
it, but I also understand, everybody's angle on it.
Yeah, sure. Sure. It's really a question of how you decide to run your label or your publisher. So great. Well, do you think there's anything else that we should cover? You mentioned interest. I rarely ever see an interest provision in the actual audit clause. Um, there's usually a claim for interest, but I've
I
never
see
actually,
both.
you
I
do?
see both. Yeah, I see both. Yeah, I see it's usually these were the amounts that should have been paid by this date, and if they weren't, this is what you owe. And then sometimes there's a provision that says if the findings exceed
Yeah,
5% or seven and a
right,
half or 10, that they'll cover the reasonable auditor costs and things like that. You
right.
see that. But the thing that we hadn't talked about yet, which is important for, if you have an audit clause, is just to be sure that it's very specific about what you can review in connection with the audit because I've seen some that are as simple as all books and records, and we did an audit. This is well over 15 years ago, but I remember um, they printed out all their books and records and put it on a table, and they said that's our books and records. It's not exactly what we had in mind,
Right.
but you need to just be clear that you want, to the extent you can, get into the source information and be able to review it.
What
And
would
and
that look
granted, I
like?
agree, and I agree with labels and publishers that some of that's got confidential information in it, and it's none of your business. And you have to work through the redaction potentially of looking at some of these reports if they're willing to give it to you. But I would just make sure your audit provision is clear
Right,
on what you can and cannot review in terms of documentation.
right. And what would be, when you say source material, what do you mean?
Well, in the case of a digital service, um, we'd much rather look at the raw inbound usage file that a digital service, I'm sorry, the logs of a digital service and what they recorded as, streams, downloads, plays, whatever it is. We'd like to see that. We don't want to necessarily see when they pushed it to the financial system to generate the statements and then they give you a report out of what they call the data warehouse, where the usage all went in there and it generated statements, and they run you a report. And of course, it's going to match to the statements because it came out of that system. So I'd like to
Right.
go upstream and get that information. And depending upon the audit, depending upon who you are, we've had some where there could be, 16 billion,
Right.
streams in a month. So to be able to do that, if you get into that kind of audit, you need an auditor, someone like us, who is investing in the infrastructure to be able to bring in that data, open the data, run queries on the data. But this is not something you're going to open on your desktop
Right.
and review.
Right.
Um, but so just be aware when you conduct an audit that you got to be equipped to be able to, if you get access to it, to these really large files of data.
And you get those files from the DSP.
Yeah, and sometimes, depending upon what it is, they might make you review it on site because they don't want to send it to you. And
Right.
then you have others that maybe are more flexible with that, with how you can access it. But I mean, these files are huge, and this is also why you want to pull a sample, and
Right.
then a set, and they don't want to have to pull all the data either for every month. So if you reasonably expect that there's something that is recurring, and then you can agree that it's recurring, and they can agree that you don't have to look at all the periods, they sometimes will work with you because they don't want to have to pull it all.
Right. Do you get resistance from, let's say, DSPs? Like if you go in, my impression anyway, let me say why I'm asking this. My impression of these DSPs is that that they don't treat audits as kind of like a fact of life. Maybe that's changed, but my impression is that they view audits as being like litigation. And they're very careful about like what they provide, and they want to have confidential information treatment, and maybe you know under
Well,
seal or whatever. Is that still the case, or is that your impression?
well, I think there's a couple reasons for it. Unfortunately, in the auditor marketplace, there are some auditors in the past, and maybe they're still in business, but I do think there's a chance that those auditors would glean information while doing an audit and then see information about for another label's benefit or another artist's benefit, another writer's
Right,
benefit, and really be bad in terms of their behavior and pitch to another artist or another writer, another label, say, hey, have you ever thought of auditing so and so?
right,
It's a good possibility that you could have, some findings that, well, what makes you think that? I mean, I don't know. Look, I mean, I'll do it on a contingency after they've already done a back of the envelope calculation
right,
of what they think they're going to find. So when you're one of those DSPs, in the end of the day, they should just be paying out what's payable, and that's all it should be. But I think a lot of those confidentiality agreements are also to put the auditor in check
right,
for not being, inappropriate and also interfering with their business relations.
right,
And there's been auditors that have been sued who their behavior has gotten them in trouble.
right. Meaning that they sort of go around talking their book because they've had a kind of approach where they've been able to see certain data, and maybe they even know that
Well,
you
yeah,
know
I can give you an example. I have never seen the court documents, but I've heard the story about this one auditor who conducted an audit. Um, and when for a film company, actually, and when he was done, he contacted some director or producer that had done films at this company and said, "You should consider an audit. I just did this other audit, and I found all of this." So what that director producer did is he wrote an email to the business affairs people immediately at the film studio and said, "I was just told." by this guy that you like not been paying through 100% for these other people, which now gives me concern. You've been doing the same for me, and I'm not delivering my next movie to you until we get this sorted.
Right,
And then the studio sued the auditor, they sued the auditor's firm
right.
because of this mess that started out. But you know what? That auditor was an idiot,
Yeah,
for doing something like that.
yeah. Well, it's not
Yeah.
that dissimilar from when you have a law firm, not mentioning any names, but that has done a whole bunch of record deals with the same label, and they get their most negotiated form, and they sit there on the phone with your new signing, and try to get, you know, everything they got for their A-level
Right.
artists. It's like, you know, I have actually told people they need to get rid of that lawyer. Either that stops or, I'm not talking to them anymore, right? One way or another, it's going to stop. So, but this is what happens. I mean, people get too cute by half. And when you're handling a lot of confidential information like that, you have to really hold yourself, I think, to a higher standard.
Well,
But
it's not just a higher standard. It's just not the higher standard. If you want to be trusted,
yeah,
if people want to
right,
look to you as being somebody that is super professional, you work overtime to make sure that you keep your information separate and tight among clients when you have clients auditing the same companies
right,
that you never cross over that. You just want to stay tight.
yeah.
But I'll leave you with this unless you have any other insights, which I'm happy to do. So sometimes your hunch that you're not getting paid could be completely wrong. And here's my story for you. I had a world renowned, one of the coolest producers come to our office. Um, Nicest guy, and he has done some of the best stuff ever. Makes tons of money, and he was there with his, as he said, his new girlfriend. And I said, "So what's going on?" And he says, "Well, she's telling me that the money in the account's kind of shrinking, and I should look into doing an audit because the I haven't been seeing the money, from this record label and this record label, and I'm like, okay, and for like how long?" And he says, "It's at least 10 years now." And I said, 10 years? I said, "How do you not notice that?" And he says, "You got my lifestyle and and you're on the move. Everybody else is doing stuff for you, but then, she's telling me the money's drying up." And I said, so she's your girlfriend. So you have an ex-wife?" And he says, "I do." And I said, "When did you get divorced?" And he says, "Oh, roughly 9, 10 years ago." And I said, "Where did your statements go and your checks?" And he says, "Well, to the house." And I said, "Well, who got the house in the divorce?" He says, "Oh, she got the house." And I said, "Do you think there's a chance that the checks for 10 years have been coming to the house and she's cashing them?" And he says, "Huh, maybe, you
Yeah,
know."
right.
So in his case, he didn't need to have an audit. He needed to just use his head
Yeah,
and put two and two together that maybe the ex-wife all these years has been cashing the checks.
yeah. It's sometimes there's a simple answer.
I mean, but that was funny,
Yeah, that is
when
funny.
he just had that aha moment.
Yeah. Could there be a connection? Well, cool. Well, thank you, Keith. I appreciate you taking the time.
For
And
sure.
it's a kind of an area that most people don't know much about. And I'm sure it'll be helpful to a lot of people. So thank you again, and we'll sign off.
All right. Take care.
All right. Thank you, sir.